Dear students, already we have discussed three problems under the redemption of preference shares. Now we'll do another problem under the same subject, same topic with a few adjustment, that is bonus shares. Now before we start with the problem, we'll understand what is the meaning of bonus shares and what are the conditions for the company to issue. Now, what is the bonus shares? The bonus shares are the free shares which are issued to the existing shareholders. What are the conditions to be followed by the company to issue the bonus shares? The first one is the company has to get the permission from the SEBI. Then second one, there must be a provision in the Articles of Association for the issue of bonus shares. And the third one is the board of directors must get the confirmation in the annual general meeting for these issue of bonus shares. And fourth one, there must be a sufficient number of unissued shares in the company. And fifth one, if the company does not have any unissued shares, on such case the company may change its memorandum of association accordingly. And we'll give the journal entries for this. The first one is for the issue of bonus shares. So bonus shares are issued out of two ways. One is the CRR and second is the divisible profits. That's what the entry is. CRR account debit, divisible profits account debit to bonus to equity shareholders. And second one is the transfer of bonus shares. And these bonus shares will be added with the equity capital. That's what the entry is given as bonus to equity shareholders account debit to equity share capital account. Only two entries to be passed for the issue of bonus shares. And we'll do the problem. The following is the balance sheet of Neeraj Limited, and check in your liability side. We have three capitals are given under share capital. So three informations are there. One is the 10,000 shares of rupees 100 each, which is nothing but the equity shares are given. And next two are the redeemable preference shares. And see the first one, 6,008% redeemable preference shares of rupees 100 each, which means the face value is 100, and rupees 80 per share paid up, which means 80 rupees only paid, which is the partly paid up shares. And the third one is 8,009% redeemable preference shares of rupees 100 each fully paid. So this is the fully paid shares, right? And the next few informations are given as a reserves and surplus category. It is capital reserves, general reserve, securities premium and profit and loss account. And next is the current liabilities. Same way in the asset side, few informations are given, that is fixed assets, investments and current assets. Now check the adjustment. On 1st April 2019, the company redeemed 9% preference shares at a premium of 10%. Now already we have two preference shares are given in the problem. We'll see which shares are redeemed. Check here, which is 9% preference shares. So 9% preference shares of rupees 100 each fully paid, which means that fully paid preference shares are redeemed. So 8 lakh preference share capital are redeemed at a premium of 10%, which means company will pay premium at 10%, means 80,000 will be paid as the premium. So totally 8,80,000 will be payable. Next, in order to pay off the preference shareholders, the company sold the investment at rupees 4,20,000. Now the company sold an investment for 4,20,000. Now why the company has to sell the investment? Now see, when the company makes the redemption, company has to pay money to the preference shareholders. Now how much is the money available with the company? So cash at bank available is 6 lakhs. But how much the company has to pay, which is 8,80,000 rupees, which means 2,80,000 is the deficit. Company does not have the amount, so that's what the company sold its investment for 4,20,000. But check the investment book value. The book value is 4 lakhs, but it is sold for 4,20,000, which means the company sold for profit, right? So profit on sale of investment is 20,000. Next, and also issued 4,000 7% preference shares of ₹100 each, which were fully subscribed in cash. So in the already 3 problems we discussed, the company issued new shares, right? So the 2 equity shares were issued. Same way here also, the new preference shares are issued for the purpose of redemption. That's it. Now, on the same date, the company issued fully paid bonus shares in the ratio of 1 for every 2 shares held. So always keep in the mind, bonus shares are available to the equity shareholders. Now, which is given, bonus shares are issued in the ratio. So how the bonus shares are issued? Of 1 for every 2 shares held, which means if the shareholders held 2 shares, then 1 share will be get as bonus shares, right? Now, next, for this, show the journal entries, and also you have to prepare the balance sheet. Now, we'll prepare the journal entry. So first one is, we'll give the entry for the preference share capital due. So here, if it is a redemption, company has to pay the preference share capital and the premium, alright? So 9% preference share capital account debit 8 lakhs, premium on redemption account debit 80,000 to preference shareholders account, right? Now the next one is, the next one is, the company sold the investment for rupees 4,40,000. Now here the asset value is 4 lakhs, now which is sold for 4,20,000, which means 20,000 is the gain on sale, right? So that's the entry I had given in the 5th one. So when the company sell the asset, the company will receive the cash. So debit what comes in, that's what bank is debited. Bank account debit to investment account. Investment value is 40,000, but here the company gets the profit of 20,000 rupees, right? So credit all incomes and gains. That's what I have entered in the credit side. So to profit and loss account 20,000, right? Now the next is, also the company issued 4,000 7% preference shares of ₹100 each. Now we'll pass the entry for the new issue of preference shares. When the company issued new shares, company receives the cash. So when the cash comes in the business, so debit it. Debit what comes in. So bank account debit to 7% preference share capital account. So 4,000 preference shares at ₹100 each, you will get 4 lakhs, right? Now we'll arrange the fund for the capital. See here, preference share capital is 8 lakhs. So this 8 lakhs will be arranged through the equity or else new preference shares, that is a new issue. Then second is the divisible profit. So here, out of this 8 lakhs, 4 lakhs amount is arranged through the new issue of preference shares, and remaining how much is needed? 4 lakhs amount is needed. So this 4 lakhs will be used through the divisible profits. Now what are the divisible profits are given? Now capital reserve is not a divisible profits. General reserve, and next is profit and loss account. Only these two are the divisible profits. Now we'll utilize the amount from the profit and loss account. So profit and loss account available amount is 4 lakhs. Now how much we need? We also need 4 lakhs rupees. So we'll transfer the entire profit and loss account amount to CRR. So interest profit and loss account debit to capital redemption reserve account, which is 4 lakhs. Now we arranged the fund for share capital. Once again I repeat, see, share capital amount is 8 lakhs. 8 lakhs is arranged through 2 ways. One is new issue of shares, next is the divisible profit. So through new issue we got 4 lakhs, and through divisible profit, which is profit and loss account, is 4 lakhs. So share capital amount is arranged. Next, the company has to arrange fund for the premium 80,000. So already I said earlier in the previous 3 classes, so premium amount will be utilized through, the first one is current year premium, and second is the last year, that is the existing securities premium, or else third will be your divisible profits. Now check your whether the company has current year premium or not. So current issue, under the current issue there is no premium, so the company will utilize the existing premium. Now check the problem, how much is the existing premium. So existing securities premium is 1,20,000 is there, but how much we need for redemption? We need only 80,000 rupees. So we'll use this 80,000 rupees, right? So securities premium account debit to premium on redemption account 80,000. See here, securities premium 1,20,000 is there, but how much the company need for redemption is just 80,000. That's what I entered the amount as 80,000 rupees. Next is the payment to the shareholders, right? So now share capital is arranged and the premium also arranged. Now we'll pay the amount to preference shareholders. So the entries, preference shareholders account debit to bank account, which is 8,80,000. So this is the usual entries we discussed in the previous problems also. Now bonus shares also are issued, right? So for the bonus shares you have to pass the 2 journal entries, and we'll do the calculation how many bonus shares are issued, which is given. The company issued fully paid bonus shares in the ratio of 1 for every 2 shares held. I said already, bonus shares are issued only to the equity shareholders. Now how many equity shares are there? 10,000 equity shares. Now check the calculation. See, bonus shares calculation. So shares held is to bonus shares. If 2 shares are held by a person, he gets 1 as bonus shares, right? Now how many is there? 10,000 bonus shares, 10,000 equity shares are there. Now how many will be the bonus? Just do the cross multiplication. You will get 10,000 into 1 divided by 2. So you will get 5,000 shares, right? And this is the number of shares, and the face value of equity is 100 rupees. That's what 5,000 shares into 100, you get 5 lakhs. Now already we discussed. So here the bonus shares are issued out of 2 ways. One is through CRR and second is the divisible profit. Now we have this, the company has the CRR right now. How much is the CRR? See, CRR we have now 4 lakhs rupees. So this amount will be used for the bonus shares. So capital redemption reserve account debit 4 lakhs, right? And next is the divisible profit. So here how much we are issuing as bonus is 5 lakhs. So out of 5 lakhs, 4 lakhs we used the CRR, and remaining 1 lakh is needed. So that amount will be arranged through the divisible profit. So always use the profit and loss account first. So profit and loss account, which is given in the problem, is 4 lakhs, right? So 4 lakhs, and check your problem. Already we company sold the investment for profit, which is 20,000. So which means our profit and loss account balance will increase. So add this 20,000, and next is 4 lakhs amount is transferred to CRR. So which means that profit and loss account balance will get reduced. That's what I have subtracted. So 4 lakhs is the balance which is given in the balance sheet, plus 20,000, that is a profit on sale. So that increases your balance of profit and loss account. And next is amount transfer to CRR. When the company transfer the fund from profit and loss account to CRR, balance will get reduced. That's what, minus 40,000. So amount available in profit and loss account is just 20,000 rupees. So this 20,000 will be used for issue of bonus shares. right? So profit and loss account debit 20,000. So still how much is needed? 80,000 is needed. 80,000 is taken from the other divisible profit. So other divisible profit which is given in the problem is general reserve. So here general reserve we have 2 lakhs amount. So now how much we needed is 80,000. So we'll take 80,000, we'll transfer 80,000 to the bonus shares. So general reserve account debit 80,000, right? Now we'll ask the entry. CRR account debit 4 lakhs, profit and loss account debit 20,000, general reserve account debit 80,000 to bonus to equity shareholders, which is 5 lakhs. Next is the transfer of bonus shares to equity share capital. Now bonus to equity shareholders account data to equity share capital, which is 5 lakhs, right? That's it. Now we finish the journal entry. We'll prepare the balance sheet. Now in your liability side, I said already, so 4 items to be entered, so you have to prepare as per the format. Your first one is shareholders fund, second is the reserves and surplus, third is non-current liability, fourth is current liabilities. So under your shareholders fund, we'll start with the share capital. See, this shareholders fund will include both equity and the preference. Now the first is the equity shares. Equity shares which is given in the problem is 10,000, and now bonus shares are issued, that is 5,000 shares. So altogether you will get 15,000 equity shares. So 15,000 equity shares of rupees 100 each, you get 15 lakhs. And next is the 6,000 8% redeemable preference shares of rupees 80 each, you will get 4,80,000. Check here. Okay. And next is the 8,000 9% redeemable preference shares of rupees 100 each. This shares are redeemed already, so this share will not be in the issued capital, right? But new shares are issued, that is 7% preference shares are issued. Now we'll enter this in your balance sheet. So 7% preference share capital account, which is 4 lakhs. So this is the shareholders fund. Then second is the reserves and surplus. Now check your problem. Your first one is capital reserve. So there is no calculation under this category. So enter the full amount. Capital reserve, which is 2 lakhs. Capital reserves 2 lakhs. And next is the general reserve given. So general reserve amount given is 2 lakhs, and in that 80,000 we utilized for the bonus shares, right? So subtract this 80,000, you get 1,20,000 rupees. And next is the securities premium, which is given in the problem. The securities premium balance is 1,20,000. Out of that 80,000 we used for the redemption purpose, right? So 1,20,000 minus 80,000, you get 40,000 rupees. And next is the profit and loss account. See here, account balance, opening balance is 4 lakhs, and with that we added the profit on sale of investment, which is 20,000. And next is amount transferred to CRR is 4 lakhs, and next is remaining 20,000 also amount is utilized for the bonus shares. So that's what, which is nil. Okay. Third one is the non-current liability. As there is no non-current liability in the given problem, I entered as nil. And next is the current liability, which is 2 lakhs. So add all the items, amount you get 29 lakhs 40,000. Now we'll enter in the asset side. The first one is the non-current assets. Non-current assets are called as the fixed assets, and there is no calculation for fixed assets, no information is given. So enter the full amount, which is 18 lakhs. The next, there is no investment right now because this investment is sold. Okay, next is the current asset, and in the current asset there is no calculation for stock and debtors, so you get the same information. So stock 2 lakhs and debtors 4 lakhs. See here, stock 2 lakhs and debtors 4 lakhs. And next is the cash at bank. So on cash at bank you have to prepare the calculations. See, opening balance which is given in the problem is 6 lakhs rupees, and check your journal entry. Wherever the cash balance gets increased, just add in your cash balance, and whenever you made any payment, just reduce it. So here, through issue of new shares, the company received 4 lakhs rupees. So add this 4 lakhs. So 6 lakhs opening balance plus 4 lakhs. Then next is the company sold the investment at a profit of 20,000 profit. So altogether, which is 4,20,000 was received by the company. So when the company received this amount, cash balance get increased. So add this 4,20,000. So plus 4,20,000 and subtract the amount which are payable to the preference shareholders. See here, preference shareholders are paid with rupees 8,80,000. So reduce it, minus 8,80,000. You get 5,40,000. Now add all these amount, you get 29,40,000. That's it. Thank you.